This is Jim Emter, Ahn Company, Alexandria, Minnesota, with your closing grain and livestock comments for March 1st, 2019. Corn market up 2 cents on the day, soybeans up 1 3/4, Chicago wheat down 2 1/4, Minneapolis down 1, Kansas City up 1/4 cent. On the week, we saw corn down 11 1/4, soybeans down 11, Chicago wheat down 32 3/4, Minneapolis down 4 3/4, and Kansas City down 17 3/4. Really, on Friday, folks, we needed to see something encouraging, and we got it. I wouldn't say that it was a huge victory, but one nonetheless here, watching these markets come back off some pretty extreme lows for the day. Corn trading nearly 10 or 5 lower at one point, and soybeans over 10 lower. Same thing for KC and Chicago wheat. So to come back and trade near steady on the close for wheat and to get higher for corn and soybeans shows major reversals on a day we needed to see them. As we look to next week, we're going to watch kind of that hopeful seasonal trend change that supports these markets. Key support levels were maintained today, and that's important to see. Would have liked to see beans close back over $9, but at least nearing that will set up the stage for next week. But going to need to see that strength carry through, otherwise we're kind of in a predicament here if we continue to accelerate through these key support levels. We do think this is a seasonal time frame that it will hold, but that's a best guess nonetheless, and we'll see what the market wants to do with it. But when you look outside and see the spring weather and 14 days of really no melt, and really from that point, March 15th beyond, only a month from planting, we think this weather is going to begin to get some attention here for the corn and spring wheat markets. When you look to the feeder cattle on Friday, you were down 165, live cattle down 30 in the fronts, up 30 in the backs. Hog market up 52.5 in the fronts, down 30 in the backs. On the week, we saw feeders down 167.5, live cattle up 87.5, and the hog market up 95. Really no cash trade to speak of here for the live cattle at this base. 129 live asking prices, 208 dressed. Bids no better than 125, and we kind of got a stalemate there. We'll see how that unfolds, and that'll set the tone for Monday's trade. But live cattle right up near, perched near the high. We've talked about the potential of getting over 130. We did that today, but we really think with the fundamental structure being a little friendly or a little negative, the demand structure being a bit friendly, and the overall tone of managed money sitting perched up with a pretty good number of contracts bought, we got to be attentive to marketing here from our vantage point. So we're encouraging our producers to do some hedging along the way, but try to allow for topside. Feeder cattle tend to seasonally bottom during this time frame, so I think that's just a step back market for right now. The hog market, we've got a 52 index. We've got board over the index at this point, and we've got exports kind of trending on the okay pattern. So nice to see stabilization, but just haven't seen that push in demand yet to take us over the edge. This has been Jim Emter, Ahn Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation. Have a great weekend.